Welcome to our wave analysis video update for this Friday. Hope you've had a great week. We're going to be focusing on three currency pairs this morning. The first one being the US dollar against the Canadian dollar, the second one being the Aussie dollar against the Canadian dollar, and the third being the pound against the Canadian dollar. So we're going to gang up on the Canadian dollar a little bit this morning. I want to start out and go through the analysis as per our training on Wednesday evening, and over the coming weeks ahead I hope to be able to share with you some more in-depth analysis of the way that we look at the wave formations, and that way you'll get used to them. Okay, we're always going to look at the daily chart first, and we're going to see whether or not price is below the 200 moving average, which clearly it is right now. Just a little bit, but it is clearly below. If I have a look at the Aussie dollar against the Canadian dollar, what I can see here is that the Aussie dollar is above the 200-day moving average. So that means in the respect to whether I'm looking for a long position or a short position, I would prefer to look for a long position if the price is above the 200-day moving average. In the case of the US dollar against the Canadian dollar, we are under the 200-day moving average, so I'd only be looking for shorts. Now this is interesting though, because both currencies are correlated against the Canadian dollar. And it would generally be unlikely that the US dollar against the Canadian dollar would rally very strongly and the Aussie dollar would fall very sharply. But we do often see some things in the financial markets that tend not to make sense occasionally. But with this respect, I'd only be looking to short the US dollar against the Canadian dollar and potentially longing the Aussie dollar against the Canadian dollar because they are above the 200-day moving averages. Now, the last one I want to show you here is the pound against the Canadian dollar. And if I can find it right here, what I'm going to show you with this one is the fact that we are well below the 200-day moving average. You can see here, well below it here. So that's on the daily chart. So both the pound CAD, US dollar CAD, I'd be looking for the potential for any short positions. Aussie dollar against the Canadian based on the wave analysis, be looking for any long positions. What we need to do now, however, is go down to the 4-hour chart. Now what the 4-hour chart is showing us is that, again, we are well below with respect to the overall trend of the 200-day moving average. Now, in relationship to this move on the pound against the Canadian dollar, where the real opportunity, in my view, was to get short in a wave formation sense is when the market came down once, twice, 3 times for wave number 3. So wave 1, wave 2, down for wave 3, dropped the big oscillator low down. The price pulled back to the 200-day moving average. Ideally, this would have been a great place to short the pound against the Canadian dollar into wave number 5. Even though we've now come up and hit the 200-day moving average again, the very first time the formation is to the downside and we see a clear wave formation, particularly when we come to the 200-day moving average up for wave number 4, this is often a very powerful move down here for wave number 5. So right now, I don't see any wave formation opportunities to the downside on the pound against the Canadian dollar. But now let's go in and see what the US dollar against the Canadian dollar is showing. Now let me blow the chart up a little bit here for you. What we can see very clearly here is we can see the market since the 22nd of July, a little over a month ago, has come down for wave 1, up for wave 2, down for wave 3, which has created a very deep low on the oscillator. It's pulled up for wave number 4. It hasn't come to the 200-day moving average, but what it has done is it's come up to at least 38%. We must have price come up to 38%. What I'm anticipating now, based on the wave formation, is if the wave formation continues to cycle through what it normally does, we should see some weakness here on the US dollar against the Canadian dollar based on the wave formation. Now, of course, tonight we've got Janet Yellen speaking at Jackson Hole, Wyoming. That's going to be a very volatile day for the US dollar. My gut feeling is she's likely to remain a dove, speak very conservatively about potential rate hikes, and that may have some weakness on the US dollar or Canadian dollar from a fundamental perspective, and that would also go in line with the overall 1, 2, 3, 4 down for 5. Now, let me share with you right now how far this Canadian dollar against the US dollar could fall. I'm going to use a Fibonacci expansion tool here. And of course, these are potential falls. And the market, from a fundamental perspective, as I said a moment ago, is going to be volatile tonight. But we often see the price cycle through these Fibonacci expansion levels. First down to the 61.8, then down to the 100% level. And I'm going to show you an example of this on the euro against the US dollar in just a moment. But right now, we're waiting for some sellers to come in to start the move down into wave number 5. That's likely going to happen or not happen when Janet Yellen speaks this coming Friday. But these Fibonacci expansion levels are often very strong. If I go into now the euro against the US dollar, what we're going to see very clearly here is a wave formation to the upside after we have seen a 5-wave move to the downside. You can see here the market, if we go out to our daily chart, we are above our 200-day moving average. Price is above, so we potentially only be looking for longs. We go into our 4-hour chart. Prices moved up and down. This small move here is wave 1, wave 2, up for wave number 3. We've created a high on the oscillator. We've come down from wave number 4, and this move here is wave number 5. Now, if I use a Fibonacci expansion tool here, from the start of the move, what we're going to see is price has gone up, down, and up here. It's come exactly to the 100% level and got some resistance. It actually came up to the 61.8%, got resistance, came down, and then moved through. So this final wave 3, wave 4, and wave 5, the distance from here to here is exactly the same as from here to here. It's 100% exactly the same, and we often find price cycles through these levels. And what we're seeing right now is what's commonly called as an A, B, C formation at the top of the 5-wave move and a potential move back lower. So let's continue to watch these wave formations. The one that I'm keen to look at today and one that we've been looking at all throughout the week is the US dollar against the Canadian dollar with respect to where we believe the price might trade to based on the fundamentals tonight. If it goes along in line with the wave formations, then we would be seeing the US dollar potentially fall in value. Now, of course, it could rise in value depending on what Janet Yellen says, but from a technical perspective, previous history shows that it has a better probability than 50% of falling rather than rising. So this, an example also from a risk-reward perspective, offers a nice opportunity. If the price rallied up, let's just assume, I'm not suggesting you should, but let's assume you entered right here where my arrow is, and you put your stop loss, let's say, above the 200-day moving average, so that's your risk. Let's have a look at the potential reward if we use the Fibonacci expansion here, just down to the 61.8%. That's the risk, which in this example, I'm not suggesting you enter this position. I'm just using an example. About 95 ticks down here to 196, or down to the 61,200. So that's a 1 for 2 risk reward. So you're risking, let's say, $1 to make $2, risking $10 to make 20, risking 100 to make 200. That, in my view, is the right way to go about looking at a risk reward strategy, always making sure that it's better than 1 for 1. Have a great day. Be careful with your risk management. Make sure that you follow your strategy and make sure that, as I said, look after your volume, look after your risk management, and I'll see you again for Monday's technical update.